Montenegro government, since it was formed last year, has taken on more than $1 billion debt, I believe. Next year it must pay back almost the same amount of all debt. World Bank also mentions significant financing needs for Montenegro in the future period in the light of challenging global financing conditions. Counting in the expected budget deficit and the shortfall next year, is Montenegro hurtling towards fiscal instability, or you think that that is not going to happen?
No, I think they're in a strong position. As I mentioned, Montenegro's level of overall debt as a share of GDP has actually come down markedly over the last 5 years.
It's going to rise up, though, according to projections, 2025. That's
yes. But I think what 4 years ago we were talking about debt around 100% of GDP. It's now below, I think, 60%, around 50-something percent. So there's a lot of space that's been created as a result of past fiscal consolidation. The economy, of course, does have external financing needs and a calendar of Eurobond repayments, but we see continued market confidence in Montenegro's ability to issue Eurobonds. External financing conditions are actually improving, and we're seeing the spread sort of continuing to decline. And that, particularly in the whole narrative of the new growth plan for the Western Balkans, particularly Montenegro is seen as a front runner for recession. I think that means there's quite a lot of investor confidence in both the economy and Montenegro's public debt.
The report mentions significant increase of public debt. Is that something that Serbian citizens need to worry about?
As long as it's undertaken in a prudent measure and a prudent pathway, I think it makes a lot of sense. We know Serbia has significant infrastructural needs. There are, and there are potentially very high returns from improving connectivity in terms of, sort of road and rail transport, significant power investment needs as we look at decarbonization of the Serbian economy. So I think no one doubts the need to make serious and significant investments. The challenge, of course, is prioritization, ensuring that the right projects are done at the right time, that they're done in an efficient way, and that at a pace which allows the government to take on a fair and reasonable amount of debt, without not at an excessive level, and trying to ensure that private investment also crowds into some of those investment areas.
Some of the senior officials in Serbian government have advocated a closer ties with Russia, including the economy ones, through participation in BRICS grouping of countries. On the other hand, Serbia has a stated goal of joining European Union. Based on what you know of Serbian economy, where does its economy's future lie, east or west?
I think overwhelmingly within Europe. I mean, the European Union and as well as other sort of neighboring economies in Europe are still 70+% of Serbia's trade. The largest investment partner. We know, the biggest economic opportunities come from close integration into global value chains that are sort of anchored in Europe. There's the opportunity to access technology, frontier business processes, and particularly possibly in electric vehicles and some of the areas that Serbia is looking to move into. I think that's where the greatest opportunities and the future is likely to be.